Yeah! Hey, da boo boo! Welcome to Forex.Today! Alright, testing, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Today is a Wednesday, I think. Yeah, Wednesday, March 3rd, 2021. Another dumb prediction day. So, in a few minutes, we'll have an opportunity to have a scalp. And then I guess we can talk about it. Right now we're expecting dollar strength, and we have it, so that's cool, but we're not sure when that's going to end, so that's going to be interesting. So thank you for being here so we can do our job together. Without further ado, let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right. Hey, thank you for being here. It's coffee time. Coffee time. It's a little bitter. Anyways, hey, welcome to Forex.Today. Like I said, we have an opportunity to trade another dumb prediction, otherwise known as the ADP employment report. And it's really a report for small and medium-sized businesses. And then on Friday, that's followed up by non-farm payrolls, which is two different reports. That's the household survey and the establishment survey. So really, you can kind of look at three different employment reports this week. This is the first one. Very cool. So ask questions, get involved. I'll do my best to share. By the way, my name is Wayne McDonald. I'm a currency trader just like you. Been doing this almost 20 years. So I might have a few things that I can share that would be helpful. So I don't know what you need from me. So just ask questions and I'll do my best to serve. Thank you for leaving comments. Thank you for being a subscriber. Thank you for being a member of this community or the FX Bootcamp community. Thank you for everything that you do. I'd like to thank the sponsor of our community, tradersway.com. You're a trader, they're a broker. Hey, there might be an opportunity to partner. You're going to need an execution partner for your successful Forex trading business. And ultimately, yes, you need fast execution speed. Yes, you need low spreads. Yes, you actually need to get paid your swaps, right? That kind of stuff. But ultimately, you need someone that you trust. And think about this. They care about your education. That's why I'm here. They like it. They think it'll help you become a better trader and survive and trade for years and years and years, and ultimately be a better customer to them. But hey, your success is important to you, so it's a symbiotic relationship. If that makes sense to you, tradersway.com, give them an opportunity to earn your loyalty and respect. Open a demo account, huh? Move over here, take a look. Today is going to be the day. Going to go back to you. ADP right in there. And then, is it today? Like, it's not on this calendar, but is ISM services today? It's today, isn't it? I don't know why it's not on this calendar, right? How have I been? I've been doing great. Thank you. Thank you. Yeah, this is the time of the year where you can get some sleep, which is good because I'm focusing much more on weekly than monthly, and then folding in daily. So that means there's like less hand holding with trades, which is good. Yeah, ISM. So that's a good one, of course. That's a good one. That's another scalping opportunity. Anyways, the first one here is at 8:15 for ADP. So we can go over here, tradethenews.com.
You're listening to Trade the News.
Okay. So ADP is small and medium-sized businesses. Just if you don't know ADP, they do payroll and employment-related services to businesses that are not large enough to have their own HR department. Think about it that way. Okay? But large enough where you care about these things, right? So let's say probably somewhere between 10 and 200 employees. Okay? Anyways. So we'll get that number in about 8 minutes or something like that, just so you know. And often it leads to a good little skippity-scalpity scoop. And then ISM is more important, but whatever. Take a look at where we are in the world. Dollar is still generally strong. Yen is still generally strong. Perfect. Nice!
Unix stressing the need for investment to lead the recovery. Announcing a super deduction to reduce the tax bill if the businesses invest. Soon it goes on to say that when a company invests, they can reduce the tax bill by 130% of the cost.
Okay, pound neutral, Aussie neutral, Euro neutral, Kiwi neutral, Swissy weak, which is strange, isn't it? So that's happening again. CAD strong. Okay.
Brazil's economy ministry saying the level
Blah.
of uncertainty
So we're
has
waiting
increased
for non-farm payrolls.
and that Q1 will be particularly challenging. The Brazil economy ministry making a statement.
So what do you want to trade against? Just do the euro dollar? By the way, did you guys grab it at 120? Okay. Is that right, Daniel? Very cool. You know, but if you go to the St. Louis Fed, if you go to the New York Fed, if you go to the San Francisco Fed, those are just some of them. They have fantastic educational resources. So Raymond caught it. Cool. So he caught it at the 120. And we're in that time of season where I expect the up and down because we have colliding forces that we discussed last Thursday. You know, that you're going to get the up and the down, and you got to pick and choose your prices.
U.S. 10-year yield at 147 is up about 8 basis points on the day. The 2 10-year spread wider by 7 basis points as rates are creeping higher once again on both sides of the Atlantic. The 10-year gilt higher by 8 basis points as well. The dollar index pushing out to session highs now above 91 in the dollar index as we head into this ADP print. The euro trading lower by about third of a percent now, 120.46. Cable also rolling back over to the lows of the session, 139.46 with a move up in the dollar index. Gold futures are down about 1% with the strengthening U.S. greenback.
You shorted it.
Higher interest rates, gold has taken a leg lower, 17.12 now in front month gold.
Again, Sunak just commented on the speech here that.
So if you shorted it at 121, you're fine.
On various alcohols, spirits, wine, beer, and cider, also canceling the fuel duty increase.
It said duty. Yeah, that's fine. But you see, buyers buy here. It's not a. Well, I guess, yeah, you sold off the central. Yeah, that makes sense. Especially if you caught it inside this 4 hour with a little sort of down and pullback. Okay. Remember, we expect dollar strength for a week or two. We don't really know, but that's what we expect.
U.S. equity futures are holding on to gains about 0.25%. The S&P minis heading into the ADP print.
For about 90 seconds, I think, from ADP.
We're looking for ADP employment at 205,000, up from 174,000 in January. We'll get you the revision as soon as possible.
More from Sunak's speech, and launching a new UK infrastructure bank, initial capital at £12 billion. That this bank will finance green industrial revolution. Again, we're just about a minute away. We'll get the February ADP employment change expected at 205,000 from the prior 174,000 increase. And Sunak just noted that the Bank of England inflation target is affirmed at 2%.
There we go.
Giving the ADP data momentarily, and again, the consensus is for an increase of 205,000. ADP comes in at 117,000, a miss there, but positive for the second straight month.
So how can you be a professional analyst, say, yeah, based on our analysis, it's going to be 200, and you're like, no, it's only half that, it's 100. Just amazing, right?
Back month revised higher to 195,000 from 174,000 in January, revised slightly higher to 195,000.
So the way that people are going to interpret it at first,
small businesses saw growth of 32,000, large businesses 28,000, manufacturing saw a decline of 14,000, with construction a decline of 3,000. ADP saying the labor market continues to post a sluggish recovery across the board. We're seeing large-sized companies increasingly feeling the effects of COVID-19, while job growth in the goods-producing sector paused. And with the pandemic still in the driver's seat, the services sector remains well below its pre-pandemic levels.
so the way a lot of people are going to interpret this is that the economy is still recovering and the Fed needs to be more accommodative. Now, the Fed already told us all this, but for those that get anxious, it'll give them strength. All right, you guys are saying there's a mic issue again. All right, I don't know why, but hang on. Okay, testing 1, 2, 3. Wonderful, thank you. Why would it be my phone? Yeah. Well, I know it's just a cable. I think I'll just buy a whole new microphone. Cool, so we got our rotation off the resistance. 120.50. All right, I put my phone on the other side of my desk. Yeah, I did change the USB. I switched USB ports. Am I currently in a trade now? Let's take a look. Yeah, a couple of them. Okay. So remember the conundrum I'm in. Okay. I'd like to remind you of the conundrum that I'm in, which I discussed multiple times. I expect Aussie dollar down or USD CAD up on the short run, but on the long run, I expect the opposite. So I'm trying to show you how to play this out, how to stay with your conviction and not chase a temporary market movement. Okay, so anyways, you can see and get myself in a little bit profitable trades, and then I'm trying to let it run. Okay, but I fully expect this not to work out and have a mediocre week or two, but set myself up for a long run good year. Okay? So it's not surprising. I think next week will be the great turning point. We got to get through non-farm payrolls and such, right? No, those trades got kicked out on the giant spike, what, 2 weeks ago? Yeah. Okay. Yeah, this is a nice area. This is pretty clearly a role reversal, right? Okay. That's right, Slaughter Club. Richard says he's getting whipsawed out of pound yen. You can take a look at that. Interesting, because it's a basic swing trade. I'm not sure why you'd get whipsawed out of something like that. Okay. So the way to trade this is the first hour of the day, the first hour of the month, first hour of the week. There was a buy, and your stop would be down here by definition, right? And your buy would be about here, right? Let's say here. And so now your stop would be about there, and you're now trading this area, right? So, so help me understand the whipsaw. I don't even see where it would occur. You must be talking about this, right? But I don't, Yeah, I'm not sure why you'd get whipsawed out of this. Let me try to look at it from a different point of view. Richard Spencer says 149.15. Price should have signal buy. At 49.15. Okay, so you're trading this. Let's let's look at it day trading. So, yeah, I'm struggling to find your whip sign. I'm not sure what you're doing. Okay, this is slightly out of position. I understand that, right? And then you got this. So when you say whipsaw, it means typically something like this is occurring, right? Higher highs, lower lows at the same time. I don't see that kind of volatility. Okay, so like let's look at what the chart does tell us. This is the buy zone if you're a bull. Okay, and you knew it here, and your plan as a bull would be to buy this dip. You also have moving averages and all that kind of stuff. So there's quite a bit going on here for buying. So whether you bought it at 70 or something, whatever. You're using moving averages most likely. There's a cross up here. Here's a test here. Price action, role reversal. So like if you bought now, you're probably going to hold it all for tomorrow. Like you're probably going to be in this for 12 hours or more. Because you're front running tomorrow, right? The other thing we also know, let's erase some of this, okay? Buying this dip, okay, like the Asia fade here, buying this dip, you know the target is here, right? So, again, I struggle with the terminology of whipsaw, because really you buy this dip, you hit this, you exit, and now you're front running tomorrow. So like this is an obvious exit. It's right. I mean, it's a day trade exit. It's the basis of day trading is the buy here and to exit here. So you're not even in this if you're trading properly. And now if you did buy it on your roll reversal, which I would agree with, you're going to be in it for 12 to 24 hours, right? So your target currently for that trade is 150. So you're buying it at 140. There's only 100 pips on this, right? Now 100 pips on pound yen is nothing. But, you know, it's a pissy little day trade. But there's no whipsawing. So if you feel like you're getting whipsawed on this, your technique isn't very good. I have no problem with you. I have no problem with you scalping, but what you're doing isn't very good if you are getting whipsawed. Okay. Cool. Sharar says shorting it. All right, so you're a bear? Well, I don't like that. I don't like that. So here, let's talk about it from a bearish point of view. First of all, do we have bearish market conditions? No. Is this a bigger than expected drop? Well, it's a bigger than normal drop based on the frequency, but we understand this is an exit. So yeah, you're going to have a wider decline. And what I mean by that is the distance from here to here is greater than here to here or here to there. And that's because everybody got out because it's obviously an exit. All right, great. So the only thing going on today is this. All right, that's why I'm like, what do you mean whipsawed? Okay, now the question is bearishness. Can you be a bear? Well, of course you can be a bear, but do you want to be a bear when it's done this over the last, couple periods? No, you're probably early. And you'll say, well, I can be a bear up here. Okay, then you would have already been a bear, probably closer to 49.50. Okay? You probably would rather have shorted closer to 50, but let's say 49.5. But you're still, the market is still a little more bullish, right? So now we have to say, well, how do you justify trading against at least a daily trend? So you got to go back to your confluence, okay? And you have to say, all right, the play is this. You're trying to take it off the M3 and drive it down to the M1, which is way down here. So this is an M3, M1. Okay, that's fine. That's perfectly acceptable. But at this point of the move, it's made a higher high. So I think you're too early to be selling. I think you would want something like this first, okay? And be a seller more like this, at this price. Now, the price is almost exactly the same, but I'd want to see a little bit more before I get short. So your strategy is fine, but if I were giving you personal feedback, and I think you're asking that by posting it in the chat, I think it's fair game. The technique is poor. It's a bit of a bet. So again, the strategy is fine, but to sell a higher high is not right. You shouldn't be able to do it, right? It'd be a rule of engagement. I'd be very upset here if you were working for me and you were trading money on behalf of our clients, and I'm like, what's this? And you're like, well, I'm bearish. Okay, I get that. And I understand the yen strength. I understand the swing trade, or in this case, a position trade. I get it. But you're accepting far too much risk than I'm comfortable with. Okay. So, I don't care if you're a bull or a bear, but there are proper techniques, right? So on the small time frame, let's say on a 15-minute chart, you can at least wait for that to become bearish, right? Okay. And so what are you going to do here? Trap this like that? Have 3 layers of resistance, for example. Okay. One of those, maybe? Okay. Well, Richard, what it feels like is you don't know what you're doing. Like there's no strategy behind your tactics is my guess. So if I asked you to write a 2-page paper, okay? A 2-page paper explaining why you are, I don't even know if you bought this or sold this, but why you're buying or selling, whatever, okay? This pair, what is the logic, the reason? And show some evidence, and then have a 3rd page that would cite your work, right? Cite your research. I want to see your sources. most likely you're trading like you're playing Fortnite. You'll blow up a trading account and you're just like, oh, reboot. Okay. Yeah. Well, but that's one of the things that's hurting, right? That's all. That's one of the things hurting. And I think you used the right language, whipsawing, but you're trading without a strategy, so you don't know what you're doing. Like, quite literally, are you buying this or selling this? I don't know, but the MACD told me, right, to do something. You're going to have more consistency when you have a plan. Okay? So being a buyer or being a seller, it's all good. It's all fine. But you should have some reasoning. So I would expect mediocre results no matter what the strategy is in March, because I think we're going to get yen strength. We don't know when it's going to occur, and we don't know exactly when it's going to stop, except before the end of April. Okay? Yeah, buying on dips. Okay, but a trade like that, I would suggest you start to swing trade, or let's see. Okay, so like if you were doing that, okay, this is probably your trade for tomorrow. Okay, now we can take a look at a different point of view and do like swing trading instead of day trading. And in that case, you know, you've had 1, 2, 3, 4, 5, 6, 7 different opportunities to buy this. And now you're letting it run, and your target is up here, 151. So that gives you an extra 100 pips from the other trade. Okay. So your swing trade. So let's change this now. Your swing trade says somewhere in this green zone, up to about here. Okay. Okay. And now we'll adjust the tool to go into a day trade. So let's go in here. Instead of a swing trade, we'll make it a day trade. Okay. And what you're looking at for tomorrow now is somewhere from this price to that price. Okay. Now, if there's conviction, some traders might want to move this up higher faster to hit their target before NFP, and everyone wants to get this to 151, but you got to get through 150. So, I mean, I don't know how you want to play that. Okay. Well, my opinion, Richard, the way I taught myself is I went from day trading. I figured out over the course of maybe about 4 years of really how to day trade, and then I moved to swing trading, and I probably did that for 2 or 3 years, and then I did some day scalping. Okay, then I taught myself scalping. And as I did that for 1 year solid, it reinforced the importance of swing trading and day trading. So if you don't know how to day trade or swing trade, I don't think you can be a very good scalper. Okay, now a lot of scalpers are going to get very upset when I say that, but you have to listen to what I'm suggesting. You have to understand the basics of what's happening in the marketplace for you to be a consistent scalper. And what I'm saying is you should have sort of a daily overview, and let's say a weekly overview. So you have a general idea of what's on the pulse of the market sentiment. Are we bullish? If so, how bullish? Are we bearish? If so, how bearish? Things like that give you better spidey senses so that you know when it's way overbought. Maybe you can scalp and off of profit zones, and then you can scalp back into longer trends. Like one of my favorites is finding the 4-hour 21 on a 1-minute chart, or a 1-hour 21, right? But not on the 1 hour, on a 1-minute chart, you find the 1 hour, okay? And what you're doing is you're buying the 1-hour 21 on a 5A cross on a 1 minute, or a 1-hour 21 on a 5-minute 5A cross up. And you end up just day trading or swing trading on a 1-minute chart. And I think the most successful scalpers are very in tune to that. They understand this is an exit, so they're gonna sell off. They know this is a buy zone. They know this is a buy zone. Okay? So they're buying off buy zones and they're selling off exit zones. And it takes a few years to get that kind of understanding. Where many people show up to Forex and they're trying to do this right off the bat. And the thing is, they don't understand the general market forces and market sentiment and the importance of, which news piece is important and relative to the sentiment, or, they're missing all these components. So you go through a process like this and you get whipsawed, and I look at it like, dude, nothing happened. How could you possibly get whipsawed? Nothing happened. Well, I could probably guess. Okay. 1, no strategy. Okay. 2, over leverage. Right? Etc. Okay. It's kind of like a doctor, where you show up to the doctor and you're like, my knee hurts, and he says to you, or she says to you, you need to exercise more, you need to drink more water, and you need to stop smoking cigars. And you're like, what does that have to do with my knee? Nothing. But I'm your doctor. And so you're like, I got whipsawed. Well, that's probably because you have no strategy and you're over leveraged. Like, how do you know I'm over leveraged? Trust me, you're over leveraged. Okay. So I would back myself out and I'd learn the things that are important. Okay. And that is, where's the market going by the end of the day? Well, if you don't know where it's going by the end of the week, how would you know where it's going by the end of the day? You guys get that basic concept? Right? If you look at your chart and your chart says, oh, we're here now, but we're going to go here. Would that impact what you do daily? Of course it would. And then you're like, wow, this could be tricky. Okay, well, that should impact you too. So what are you going to do here? Well, you're going to, right? You're going to buy the dip. Like, there's nothing, like, the only thing that would be different here is if you're bearish. But if you're bearish, you already know this is your sell zone. So right? You're kind of waiting for this to roll over. And maybe you shorted here or something. And maybe you took a small loss. Maybe you took a break-even trade. But the only, it's not that you were wrong. Well, it's not that you traded poorly. It's that your strategy in this moment of time, is wrong. You were betting on yen strength and it didn't happen yet. And maybe you're a little too aggressive. All these things happen. But you should know, as a bear, for example, that this is a massive sell zone for bears. Okay? And so clearly a bull bought it here and they drove it through. Right? A bull drove it through and they're going to drive it further up and they're going to try to get it here. But all of that's been established. But if you don't know these things, you're like, wow, I didn't know this and this were going to be our prices. Well, that's why you're getting lost on a 1-hour chart or a 15-minute chart or a 5-minute chart. And you're buying and selling either at the wrong prices, the wrong time, or for the wrong reasons. Okay? So imagine you went into today's New York session like this. Okay? Pay attention to the logic. Okay? Let's do it this way. Okay? Please pay attention to the logic. This is important. All right. Yesterday, oh, God, I just screwed it all up. Where were we? Found you. Okay? Just trying to back this up. Okay. Yesterday, let me try to draw it like this. Okay, yesterday looked like this. Okay, and you're a bull. Okay, you following me? So, double bottom, higher high, higher low, buy. Higher high, higher low, okay? You know, somewhere in here, plus you got your moving averages, plus you got your projected buy zone. Okay? You're going to buy. Okay? And you know this is the target. That's what yesterday looked like at the market open. Okay? Oh, Marina, I saw your comment there. No, what I'm trying to share, Marina, is that you need to understand all these things first. Okay? That you should be able to scalp, spot, swing, and carry trade. But you need to understand your market forces before you go in scalping. Otherwise, very often new traders trade like they're chasing their own tails. Okay? It becomes gambling if you don't understand what you're doing, right? So I'm not challenging scalping. I love scalping, but I'm saying the way I taught myself was to day trade first, then to swing trade, then to scalp. And the more I paid attention to my general thesis for the market conditions, the better my scalping got versus just scalping. So my experience is people must know how to trade on small time frames, but they'll do much better if they're trading consistently with market forces in general. Okay? So if you don't know that traders are going to exit at a certain price, if you don't know that before it happens, then you're probably not going to be able to set that up ahead of time. Therefore, it's not a scalp. If you're reacting after the fact, that can't be a scalp because you're already late. It's already happened, right? So a scalp, you got to be ready, willing, and able at the right prices, buying and selling. But if you don't know what the market's doing, if you don't know where bulls will buy, and if you don't know where bears will buy, that would be their exit. But if you don't know where bulls will buy and bulls will exit, then how could you possibly scalp? Because you don't know what's happening. Okay? So you can't counter trend trade, which is a form of a scalp, if you don't know where traders are going to take profit. Okay? Like, it just, right? So that's why I say do it, but you should be generally educated on the market before you start scalping. Okay? Anyways, so like for example, you should know as a bull, that's like ridiculously obviously a buy. Here, here, here. There's plan A, plan B, plan C. It shouldn't matter which one. And then if you're buying here, there's your target. Now, if you're a scalper, okay, this would be a place you would look to scalp back down on counter trend trading. Okay, so you would be buying here as a day trader now, and your exit lives here, which means you bought it here. If it comes up here, you exit. And then what? Well, if it gets up there, it'll pull the pivots up, and right? And we know somewhere in here will be the new buy zone on Thursday. You guys following? Like, you should know this before you trade. My guess is Richard may not have known this, or whoever else, right? So if you don't know these things, it's going to be very difficult for you to consistently plan, or not. I mean, not consistently plan, but get more consistent results. All right. So what actually then happens, we see, is this. Okay. Okay. And now we already know we're on our way to tomorrow's target up here, which would be the new exit. Okay. Now Ahmed says for a sell, well, we don't know yet, because I would not recommend selling per se until the market turns bearish. Now you're saying sell off the exit. Yes, you can do it, but it's more of a counter trend. It's stop hunting. So it's very, 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 it's a very, very dangerous, very short term trading strategy, which you can do in those conditions only. Okay. But I would consider it stop hunting. I wouldn't, selling is too big of a word. Okay, Ahmed? Selling is, to me, is entering a trade into a trend. You're a seller. You shouldn't be a seller there. It's a form of scalping, which is simply stop hunting. You're not even really a seller. You see what I mean? And what kind of fool sells in an uptrend? A broke one. So I wouldn't say you're selling, but you are hunting stops. You're being a bully. Okay? And you can do it. You can do it. I don't think you would do it, though, Ahmed, if you were trading $1 billion. Okay? So it's one of these things like, it's sort of the money you make relative to the money you risk is too small. Yes, you can do it. Yes, you can pick up 30, 40 pips. Sometimes more, sometimes less. But it's probably the riskiest form of trading you can do. Okay? Okay? Now the thing is, for you to trade like the smaller time frame stuff purely is your only method, it gets tricky because you can't do it with as a large percentage of your trading account. Okay? So like, that's why I say, like, if you had $1 billion or even $1 million, okay? So you need to make, so you have $1 million, you need to make what? 25 to 50,000 a month. And you'll find that when you're trying to do that without having a loss, okay, which is all very tricky, the day trading, the swing trading, the position trading, in of itself, they all have their own inherent strengths and weaknesses as a strategy. If you really are that good on scalping, then if you can harness that skill that you have, which is a fabulous skill to have, and combine it with some longer term trading strategy now, it's not a skill anymore, it's a strategy. It's a capability, like you're thinking a day ahead, you're thinking by the end of the week, not simply hunting stops for the next 3 hours, picking up some pips. Instead, you're like, okay, I know the importance of this zone here, and if I can scalp into this around 149 and have this head up, I can jam my stop, and if I get this right, then we're going up here, and maybe a little higher because of the destination we have this week. Now remember, we're not pricing in NFP, and that always muddles things up, but I'm trying to get like the logic here, the thought process, because with the larger sums of money, every time you pull the trigger, it's another level of risk, and the money is big, and both the account money but also your compensation, right? So at some point, like, you're scalping so you can make an extra 50 or $100 or whatever it is. I don't know what the money is. But if you look at it differently, if you hit your 30,000 for the month on your $1 million, you're going to earn, right, about 10 grand as the money manager. And you might say, well, that's a lot better than a whole bunch of little scalps. And what if you get into bigger trades that last 2 or 3 months? You might be in the same 5 or 6 or 7 trades, but now you're making $10,000 a month doing no additional. It's just that they're running longer, they're earning more, okay? Now, of course, you wouldn't just do that because you don't get paid to sit on trades, but you find out that the compounding compounds so much in your favor that that I think you'll naturally utilize your skill on analyzing best possible entry and best possible risk management. I think scalpers on the long run probably become better risk managers because they understand the sensitive prices that impact, right, trades. And you want that. Down the road, when you incorporate things like seasonality, let's say, then you're combining time with, right, sensitive time with sensitive price. So as a scalper, you're really good at understanding which prices are sensitive to a pullback or a drop or a reversal, and which ones are less sensitive to potential drops or reversals. Okay, and then you throw in seasonality, and now you have price and time sensitivity analysis inherent in your trading capabilities. And all of a sudden, holy smokes, right? You're a really, really fantastic trader. But trust me, if you were trading $1 million account, most likely what you're doing off of like a stop hunting trade, you just wouldn't do it. You just wouldn't do it. Yes, you could pick up money, but it's the hardest work, right? Like, I think in my book, I say it's twice the risk for half the reward. Okay? Right? Okay? So Armand says, yeah, short euro yen for 40 pips. Cool. Cool. It's right now it's a market open type trade. It's only 40 pips. Okay. Very good. It's a good start. Okay. Cool. Yeah, so to say it again, what I would recommend for people to learn is things like, okay, we'll go all the way back here. Yeah, November 1st. Great. All right. I want you to learn things like this, that on that day, we became bullish on this pair. Okay? And in here, I had a special 6-hour webinar. Okay? So, here's what I'm suggesting. If you're a scalper, and you filter some of your trades based on bias, okay, you can bring even more consistency. Because what I'm trying, my message is, if you're a bull, let's say you get this down, and you filter out some, let's say, or I guess what I'm saying is less short trades, unless you're at, okay, unless you're at key times or price. Key times or prices. Okay. All right. So what were the key times for Aussie yen bearishness based on profit taking? Because remember, there's no fundamental reason for this to fall. There's none. There hasn't been since October 1st. There has not been one reason, one fundamental reason for Aussie yen to come down. So, therefore, it's not a fundamental reason. So, what are the key times that bulls would take profit on Aussie yen? That's a price, not a time. Well, Aussie change, policy change, but we don't know that. We don't know when, and it'll always be different. Yeah, one would be at the end of the year. Okay, somewhere in here, either right at the end of December or right at the beginning of January. If you recall, I was actually a bear in January. Okay, neutral in February. Okay, so I would have thought this might have happened. I would have thought this might have happened, but I'm not really bullish, and I wouldn't be shocked if it became bearish again. Okay, then we go into March. Do I expect Japanese yen strength in March? Yes or no? Okay, so I told you in November, I told you in December, I told you in January. Okay, in November and December, I said the best we can hope for was December 18th. Okay, out right here, out, so out. Why? Because I think Aussie versus yen will head down in January. So January is here, down. February, I don't know. I've seen everything on this planet. I've seen up, down, and sideways. So I don't really know. Okay, so now we're getting into March. And you know, I told you in November, December, January, February, and March, that I think marches down. So now I have key times in which I can be a bear. Once again, I think most people don't trade with this type of outlook. But I think they're, right? They're going to be better. So, right? And then prices are things like entries and exits, right? So imagine this now. You filter, you only sell at very key times or very key prices. Otherwise, you only buy as a scalper. So you would only buy dips. You'd only buy dips. Okay? You would stop buying dips, but if the market became bearish, you have permission to start selling. This one could be up, down, or neutral, so you can go back to, I guess you can continue. Okay? Then you get here, and once again, now you have permission to sell. So you're in this period, you're selling a lot more, and here you're not selling ever. Okay? Now, you might say, well, Wayne, what about this? Okay, once again, stop hunting. You would have got punished in February, but it would have worked in November and October. I don't think it's necessary, but that's going to be your judgment call. Okay? But if you were going to be a seller, okay, January and March are the most acceptable in my opinion as a bear scalp. And in here, I think it's actually counterproductive. I think you'll talk yourself out of the better way of making money, which is buying right here and buying right here. Okay, buying right here, buying right here. Okay, all this kind of stuff. You're going to miss the bigger picture. Okay? And the big picture is this. This is from October. Okay? I gave you my opinion of this being up on April 9th. This is October, dude. So my fear is if you are lost in the forest and all you see is trees, you forget which way is north. And therefore you never get there. And most likely you end up in a financial circle of you made money today, you lose money tomorrow. You made money today, you lose money tomorrow. And, right, you find out you're just walking in circles in hopeless night. No guiding stars in the forest, right? So I'd rather you say, look, I know where I'm trying to go. We call that strategy, by the way. And you have a compass and a map. With that knowledge, you know where you're trying to get. You have a compass and a map. Okay? Whatever you do after that is acceptable to me. So if you know where you're going, you have a compass and a map, and one person says, I think we should go this way, and a different person goes that way, and this person wants to follow the water, and this one wants to find a road, and this one just wants to, head straight north, and the other person just wants to stop and wait and create signals. They're all fine strategies. I don't know which team will get saved, but I want you to have the strategy first. Okay? Think of it this way, Raymond. We have to have business plans, right? Imagine your trading account as a business plan. You're going to earn 3% a month or more. And over the course of 12 months, right, times the 3%, you have a pretty good idea how much money you will have in your account. Okay? Now you filter this out and say, I'm going to make 5% this month. I'm going to make 5% this month. I'm going to exit out and make 2% this month. I'm going to make 2% this month. And this one it could be a tricky one. So you might only make 1% this month because you'll tiptoe in through the landmine and you'll lose a few toes, but you'll probably live. And then next month you'll have 4%. The month after that you'll have 4%. Okay? And then we'll go into summer and we'll go back to the 2% stuff. And right? So 1, 2, 3, 4, 5. Let's do it that way. Okay. So now you have to do this where you have 5, 5, 2, 2, 1, 4. I guess let's make one of these a 3. Okay. So now you got 5 plus 5 is 10, plus these two is 15, 20. 20 divided by 6 is what? So you'll do fine. At the end of the year, you'll have a certain amount of money and you'll be on target. Okay? Cool. So it just turns out 3 compounding is pretty close to 50%. So, okay? So let's say you have $1 million. Okay? Times 50%. Now you have $500,000, of which you earn 20%. Okay, you made $100,000 per million. Okay? And so if you have $10 million, you're going to make $1 million a year. $1 million a year in your pocket as a fund manager because you earned 3%. So now you're very focused on how to do that with the least amount of losses possible and the least amount of risk possible, because it's the same thing, right? And you're like, it's this stuff that changes. You stop doing this when you know that if all you need to do is some basic swing trading, you get this right, that's 90% of your job. So now you're not pissing around with these little trades, but knowing how to do it is critical to knowing when you should get in, when you should move your stop, when to jam your stop, when to get out, when to run away. Okay? All that kind of stuff, it's important, but the more money you get, the less you're going to do stop hunting. Because like, why do you need that? Well, I can pick up another 40 pips. Well, I'm not really interested in 40 pips. Because the other thing you do is you start lowering your leverage, because based on what most people are doing right now, they make 3% a day. And I just told you, if you had a business around what you did, you might make $1 million a year doing 3% a month. So you're pissing around doing 3% a day? Why? So now you start cutting your lot size like crazy because you don't want that kind of risk. You don't want to lose 3% in one day. It's unforgivable to lose 3% one day. You're like, oh my God, that's horrible. Like, it's the end of the world. So if you can make 3% a day, you could certainly easily lose 3% a day. Boom, you're fired. So all of a sudden now you're cutting your lot size like crazy. And now you don't need another 40 pips counter trending, because it's like There's no money in it. There's nothing in it for you. You're like, why the hell would I do that? So now you start backing out and you're like, all right, what am I going to do for the next 6 months? I think I'll buy some dips. I'll front run November because I'm extremely bullish. I'm going to go into here. I'm going to take some profit early in January, but I want to get long in February and March. But March is going to open hot, so I want to get out, and it's going to come from the R1. It's going to come back down to the S1, and then I'm going to, if things go well, I'm going to start building my portfolio again like I did way down in here, and I'm going to start buying in March, and I'm going to drive it up to June, and I'm going to make, right? I'm going to make the account will be up 20% by then. And I'll walk away with $250,000. Actually, sorry, it'd be $500,000 because we're talking January to June. And you're like, yeah, good half. Where's my 500K? And all you did was build a portfolio based on the one thing. And you'll stop doing smaller, mediocre, unnecessary trades. And you'll pay a lot more attention to building your portfolio, meaning buy, right? Exit. Buy, right? Buy or buy, depending on what happens. And then by June, we'll be up here. And that you have this portfolio. Okay? And what will happen is you will change your behavior because the assets under management do matter. Okay? Because at some point, even your clients don't want you to make that kind of money. At some point, your clients don't want you to take big risk to turn 1 billion into 2 billion. I'm talking like someone's actual money, not a hedge fund's esoteric version of money, which is nonsense, of course. I mean, you meet with a family office and someone spent an entire generation building the family's wealth to $1 billion. And you're like, hey, give it to me. I'll gamble it and see if I can turn it into 10 billion. And they're like, no. Actually, we're quite comfortable having the billion. Our life won't actually change that much if we go from 1 billion to 5 billion, but it'll change a lot if we go from 1 billion to 0 billion. You get the concept? So they're like, here's how we budget. Our family office needs you to make, right, 8% a year so our family can live on $80 million. Okay? 8% a year. And you're like, okay, well, of that, I mean, dude, right? That's not even 1% a month. You're like, okay, I can do that for you. Okay? But I'm going to charge you $16 million to do it. Would you take this job if you have to make 0.75% a month every month? Would you take that job? This is, by the way, how endowments work. Because a family office would set up an endowment for themselves. They want the 1 billion to last in perpetuity. They want the $1 billion to be there in 100 years. They want the $1 billion to be there in 200 years, adjusted for inflation. So they might say, well, we need the 8% plus inflation at 2%. So Wayne, we actually need to to produce 10%. Okay? And you're like, well, that's still less than 1% a month. So you're like, okay, my goal is to focus on 1% a month. Okay? And that's going to cost you 18.5 million. See, the thing is, and yeah, and by the way, 18.5 million every year, year after year after year, right? And you're producing the 1%. So are you going to be scalping off, picking up 40 pips? Or are you going to simply buy in April and go away, or buy in October and go away? And you say, well, the Fed said this, and therefore that, and therefore this is going to go up for the next 5 years. Do you understand? Which one are you going to do? Every single day you have no idea whether you're buying or selling? Or every single day you have to decide, should I buy today or should I sell today? Or you do stuff like, yeah, my outlook for 2021 is based on reflation, re-expansion, reopening of the U.S. and global economies, and therefore, based on my 20 years of experience, I'm going to sell the Japanese yen and I'm going to buy or sell the U.S. dollar, except in January and March. Okay? So now the next part of this is you can't just take $1 billion and buy $1 billion here because you're not allowed to lose. So what you need to do is by the time you're here to June 1st, okay, June 1st, so we're talking October to June now, is to have 100 open trades. Or something to that. It's not actually, that's not the goal. But what if you did something like this? Your goal is to one trade at a time, you listening? One trade at a time, maybe one trade per day, whatever. One trade at a time, you enter a trade, you move your stop. And your goal is to have 10x your AUM in trade. Okay? Let's say, maybe that's your goal. So you got 5 million under management, let's say, instead of $1 billion, let's make it a little more realistic. You got 5 million under management. Let's say over the course of 6 months, you want to have 50 million in trade. Remember, you're leveraged. Okay? And at any given trade, you enter, it's so small, you're 1/10 of 1% at a time or whatever, right? But like $1,000, right? $1,000 of your account can get you in $100,000 trade, right? You see? Maybe that's something that you're going for. So 10 trades is $1 million, okay? So in this case, you're probably not trading standard lots, but you're trading 1 million lots, or, right, big lots, right? Either trading a big lot, right? So you right? 5 bigs gets you to 5 million, right? You see? And you start building up. Or you're trading, not two bigs. You're trading a combination. So you trade 3 lots at a time. So every 3 trades. So maybe you do 3 trades a day. And at the end of the day, you jam your stop on 3 trades. So you got close to $1 million. I know it's only 900K. Right? And you're like, okay, that's great. And then in day 2, they're still profitable, so you try to jam some more. Over and over and over again, right? So you're trying to do 5 million a month for a while, right? So you do some trades here, 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 right? And then it breaks out, pulls back. You do some trades here, right? Maybe somewhere in here, and a couple of them get knocked out, and you try again, and you try again, and now you full exit. Now you got to rebuild, right? But the thing is, you got $1 million here and $1 million here, 2, 3, 4, 5, 6, 7, 8. So you got about 10 million in trade, okay, going into January. So you're going to exit your 10 million, start over again. But you only have 5 million in the account. So your account is 2x going into the end of the year. No, but you have 100% available margin, okay? And all your losing trades, you got knocked out for tiny losses. But these bigger ones are lasting longer. Okay, you're in $10 million worth of trades on a $5 million account. All stops are at break even, so you have zero risk. That's why you have 100% available margin, because all your trades are, right? And then you exit here and you collect your 20%. Okay, now it becomes a job because now you have to start over. And now you're not thinking hourly or daily. You're thinking about the quarter. You're thinking about now to June. How am I going to do this between now and June? Okay, well, there should be some down and maybe some up. When do I start upping? Well, how about off of the central pivot, right? So now you start going in here. All right, so this I totally expected, right? So now what? How do we do this? How do we do this? Well, there's potential for up here. Why? This is a central pivot point and I'm a bull. Okay? So now you're trying to do this. Up, 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 down, down, buy. Up, 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 down, down, buy. But you understand, if you're lucky, it works out and you keep buying dips. You also understand that it can come lower and even quite a bit lower. So you're not loading the boat, but nowhere are you ignoring the down. Okay? We all expected yen strength by March 1st. Do you understand that? How 100 times is probably not enough. I've told you more than 100 times that in this period, okay, yen strength. So we got it. Cool. Okay. So this would be one of those periods where maybe you had a good February or a good January. Okay. You had a good 5-week run. Exit. Okay. And have it come down. And now you're naked again. You have no portfolio. Or you've decided to hold on your portfolio from earlier. Okay. I think Raymond was one of the guys that when I said short the dollar for the next 5 years in April, he started shorting the dollar in April. Now I think he rode it all the way to December. But what if he was trading $1 billion and said, well, there's no way COVID's going to collapse this whole thing all the way back down and create and force the Fed to go negative on interest rates. So he could still be in those trades for 5 years because he knows, right, that he's right. Now I think he only made 10,000 pips or something, so we have to feel bad for him. But how would you manage your money differently if it was other people's money? Would you counter trend trade? Would you stop hunt? Is it really that necessary to pick up 40 pips? The 40 pips is really that relevant to you? Right? Are they really that important? Okay. The answer is yes. But as your money gets bigger, the risk far outweighs the potential reward. It's just so, right? Because you're not allowed to lose money. So every trade needs to be small, and therefore the only way to make money, the kind of money where someone's going to pay you for the trouble, the only way to make money that is greater than the opportunity cost of the investment with you. So if someone else can make, 15% a year investing into real estate, or they can invest into you and somehow it equates to the same amount of risk, but you can produce 30%, okay, then great. So the only way now you can have that kind of reward without accepting risk. You have to think about this. Reward is a function of risk. Therefore, the only way without taking risk or controlling the risk, the only way to control the risk and get the return that overshadows opportunity cost of your clients is that your trades are actually worth more. So like stop hunting, selling in an uptrend could not possibly be a strategy that does that. Because now you're doing the opposite. You're taking the risk, you're selling an uptrend because you believe bulls will take profit, but you don't know. And then you'll sell it, and then you'll buy it back. I think having that skill is critically important to have, but I'm telling you, if you realized if all you had to do was 3% a month and you could be a millionaire trading other people's money, then you're like, whoa, dude, I don't need the 40 pips because the 40 pips are worth so small relative to my account size because my risk is so small that there's no incentive to do it. It's all downside. Because you don't want to sell your general strategy. Like, for example, you would promise your client, you'd say, well, I've analyzed the market, I looked at what the central bank's doing and all this kind of stuff. I believe we'll have a 5-year rally in the United States for this reason, this reason, this reason. Okay? And then you lose a bunch of money and then your client shows up and you're like, what the hell? You did the opposite of what you explained to me. You're like, well, I was stop hunting. All of a sudden, it just doesn't line up, right? So what'll happen is because your leverage is so low, and by leverage, I mean lot size relative to account size, that there just is no incentive to take the counter trend trade, to take the stop hunting trade. Yes, you can do it when your account is small and your lot size is large to your account size because you're like, dude, Wayne, I made $40, or Wayne, I made $400. I'm like, wow, you put a full standard lot on that thing? You put $100,000 on that trade. How much money you got? Well, I got no money. All right, well then $400 is a lot. You're like, dude, seriously? But you wouldn't put, right? You wouldn't put 40% of your $1 billion, for example, like, boom, I'm going to put 400 million on this and pick up 40 pips. Dude, and it just ain't going to happen. So if you get your business model right, you just wouldn't do it. But I love the fact that you have the skills from when you were a younger trader to know that those are the places that are important. Because if it's an important place where you believe there are going to be stop hunters, then maybe it's a good place to take profit. In particular, if you know the timing, you're like, oh my God. You guys remember talking about M5 back in February? Okay? Like, all these pips are dangerous pips. Do you guys remember me telling you this? All of these pips are bad pips. You can't count on them. They're unreliable. It's a mirage. You're getting sucked into a sucker's bet. That is what I'm talking about. So if you know that's coming because of A, seasonality, And then B, you're at like M5 on the 3rd week of February. Are you crazy? Okay, so now you got the time and price. So you're like, oh man, I'm gonna book all my profit, and this market's gonna collapse, and my clients are gonna go, Wayne, what happened? We heard the market's crashing, interest rates are going through the roof. What's going on with our money? And you're like, it's all good. I'm not even exposed to that risk. I banked a ton of profit on your behalf. By the way, I'm going to need my $300,000 right now in cash. Okay? I got to put fuel in the jet. Send me my check. Where my money at? Okay? And then once you go to cash, you got, right? Now you start tiptoeing. You start doing tip. And by the way, these are all the messages I've been giving to you in real time. It's coming, it's coming, it's coming, it's here. Okay? So let's go right back to where we started. You got whipsawed in this. And then I struggle to understand what you're doing. Like, what are you doing? Like, what are you doing? What is it that you're doing? I'm thinking about June. I'm actually worried in my meditation. I'm like, what about summer? What's July and August going to be like? When's the liftoff going to be like? When does end of summer rotation take place this year? When can people start traveling again? And this is what I'm thinking. And if you're caught inside of this and you got 4 or 5 losing trades, I don't get it, right? Because you can see the levels of thought that I'm putting in, and I'm trying to teach you to put the same thing in. I'm trying to teach you to be a boss, a master of your domain, right? But the master and boss of other people's domain, they're entrusting you with their life savings. Whether it's a financial institution like your local opera house. And you're like, Wayne, I'm not there yet. Well, it could be. But what about a family office? Okay? A family that's got $30 million and they can throw $1 million your way. You're like, well, how do you get to that point? Well, you need to work with people that can pop in. Let's say your mom's boyfriend owns some real estate and he cashed out some and he's got some cash and throws it your way, right? And all this kind of stuff. And all of a sudden you find out to trade $1 billion 20 years from now, you need to trade like you have the $1 billion today. Because then you'll have a track record of success that can get you small money from other people. And then you'll trade them successfully. Then you'll get larger money from other poor people. And then it'll be a little bit richer. Dentists and doctors and lawyers and electricians probably have more money. And they'll throw some money your way. But those guys want to talk about, wow, are you in the Iraqi dinar? No. I trade Great British Pound. Okay, but you have to have conversations and explain so that they understand, and they want to like flip some Schlumberger stock or something. You're like, whoa, settle down, son. Let me handle this. Throw some money my way, and I'll show you how to do it slow and steady, steady and slow, and remaining completely liquid. Okay, and then you go from that money to slightly bigger money and slightly bigger money, and all of a sudden 20 years from now, you're going in with a PowerPoint deck in front of an investment committee, an investment subcommittee, and you're like, yeah, throw 20 million our way. Here's what I've been doing for the last 10 years. Here's how I can structure the portfolio to give you the results that you need. And here are my fees, and here's this, and here's that. And they're like, yeah, that was a great presentation. We want to invest. But if you want to be there in 20 years so that you can make 1% a month and they're going to pay you $1 million a year? Think about it. How would you like to be in a situation 20 years from now where you are going to make, you're promising somebody 1% a month, and they're promising you $1 million a year if you can do it? Well, then you need to be attractive to them. You need to show that you can do it. So now you need to start today, 20 years ahead of time. Okay, you see, you need to think and act big now. Otherwise, you will be small in perpetuity. Thank you for being on my team. I'll see you tomorrow. Cheers.